Hello, everybody, and welcome to the 5th edition of the Insurance in the Digital World Conference. We have met already 4 times until now, 3 of them in person, 1 online, another one this year online. Hopefully next time we will see each other face to face. Until then, please let me first of all thanks to our sponsors, to Euroins Insurance, to Asisoft and 5plus, 3 companies that are constantly supporting our conferences. Thank you very much to all of you. And I also need to warmly invite you to participate in the discussions. My colleague Adriana Pancho is here with us and she will help me monitor your questions. So please ask questions on the chat. You can also put them in the comments on YouTube and even raise the hand if you want to have a comment live. Okay, that being said, thank you also to our speakers today. You will see, I am sure that they will provide for very interesting information. They are a quite exquisite team of speakers. You saw them on the video before, but I will make a short recap for you. Is Mr. Tausche, Chief Insurance Officer for Generali Romania, and also representing the National Union of Insurers in Romania. And then Mrs. Laura BALOI, Head of Digital and Customer Strategy from NN Life Insurance, also here in Romania. We will have with them a segment of discussions more centered to the Romanian market and also to 2 business lines that for which we hope digitalization will help the development and the further growth. Also, thank you to Mr. Kobi BENDELAK. He's CEO of the InsurTech Israel and will help us by speaking about a very well-developed InsurTech market and a rich environment, rich offer, and the way that InsurTechs can cooperate with classical insurers so that everybody will benefit from this, mostly customers in the end. And in the second part, we will have as guest Mr. Matt Harrison, Director, Product Management Cyber for RMS, and Advocate Giorgio Grasso, representing Batini Traverso Grasso and Associati. They will speak about cyber risks, the legal environment around this category of risk, the lessons learned during the time and what expectations we can have for it. And now in the beginning is our surprise guest, if I can say so, a very special guest, and I'm sure that it will be very interesting for you. And I'm pleased to introduce Mr. Matteo Carbone, founder and director of the IoT Insurance Observatory, co-founder of Archimede Spac, global InsurTech thought leader. Matteo is a very well-known person for all those interested by cyber, InsurTechs, digitalization, all kind of topics that are encompassed under these titles. And I'm sure that he needs no further presentation more than that. Welcome, Matteo. Happy to have you here.
Thanks, Daniela, for the invite. I'm happy to share some thoughts with your audience.
Well, then let's practically start this discussion. And I would like in the beginning to have your comments on the main trends that you have observed lately in the digitalization process in the insurance industry. Okay, digitalization is a term that covers a lot of things, in fact, but what would you name or list as the main trends from your experience?
I think that one of the most relevant things I've seen at a global level over the past 12, 16 months is a more mature approach to innovation in the insurance sector. So for a few years, we have seen insurance incumbents that were not considered innovative at all that have played with toys. So I've seen many initiatives that lasted the time of a speech on the stage of a conference and a press release. I call these toys for CEOs. Instead, we have seen some players, not all, starting to take it more seriously, trying to identify initiatives that can have a real impact on their core processes. Obviously, we are starting to talk about a business transformation. So not something that happens overnight, but I think that this is relevant because it will allow the players that are taking a more serious approach on innovation to build progressively the competencies that will represent competitive advantages over the next 5-10 years.
Okay, and can you maybe name some example in this respect, something that really was impressive for you, or you consider that can be a lesson for somebody else interested?
Let's say, I think that at a global level, what Discovery Insure has done on the innovation of life and health insurance business, leveraging data, wearables to help the policyholders to improve their behaviors, to become healthier, represents one great example of concrete impacts on things that allow the insurance company to obtain better economic results and to provide also value to the policyholder and improve the customer experience. They demonstrated that this was not something applicable only on the South African market where they started 30 years ago, but over the past 10 years, they have replicated this in 25, 30 different insurance markets, from Asia to Europe, North America, and South America. So I think that this can inspire any insurer globally. Discovery didn't start with a size as player that you mentioned that are here with us today shows. So they was a market leader in South Africa when they started the internationalization, but they was not one of the first 10 global insurers. So they are demonstrating that if you have the right capabilities, a vision, and the commitment to execute, you can scale a business even without being at a global level one of the first 10 insurers with billions dollars budget for innovation each year.
So that would be another way of growing, I understand. I would like to talk a little bit with you now about InsurTech, because I remember many years ago when they started, they were looked at like something a little bit strange, doubtful from the insurance business point of view, and step by step they grew into becoming real partners to insurers. So to make it short, in your opinion, what is the current place held by InsurTech now in the insurance industry, and where do you think they are heading in the foreseeable future?
So I would like to answer to your question with two different perspectives. The first, talking about the most mature full stack InsurTech, the players that have been considered disruptors 5, 6 years ago, so the oldest InsurTech players, I think that some of them maybe will survive. They will not disrupt anything. Maybe will survive. We have seen some of them acquired. Yesterday, Trov have been acquired by travelers. But I think they have contributed significantly to evolve the thoughts of the insurance executives around innovation. So they have done R&D for insurance. They have nudged insurers to try to do things. Now I move to the second part of my answer. At the beginning of 2018, I published a book that had as a title, All the Insurance Players Will Be InsurTech. Well, it is happening. My key thesis of the book, where I was saying that incumbents will have used data and technology as key lever to compete in the market, is something that we are starting to see. So players that are succeeding in using auto telematics data, players that are starting to use different data sources to price the risk, that are using satellite data for claims management. So insurers have understood that in any step of their value chain, there is the opportunity to use data and technologies to do better. So I think that this is the place of InsurTech. You mentioned it correctly, that we are seeing more and more players that are providing tools for incumbents. So in the future, for sure, we will have newcomers in the insurance sector that will use InsurTech solutions. We will have agents and brokers that will use in their business InsurTech solutions. We will have insurance incumbents with 100, 200 years of history that will use InsurTech. Players that will deny that will survive for the next 5 and 10 years, but they will struggle to do it in a profitable way.
Okay, thank you. You mentioned the word opportunity, which brings me to my last question for today for you. Mm-hmm. Namely, in this very rich landscape covered by the digitalization concept, do you think there are digital solutions that are not yet sufficiently used, that are opportunities still not used at their real potential?
About opportunities, I would like to highlight one trend that can be observed looking at the weight of the insurance premiums on the economy at a global level over the past decades. So if you look at this statistic that Adrian Jones, a good friend of mine that published a few articles over the past years about insurance innovation and InsurTech together with me, at one conference last autumn, showed this statistic that clearly pointed out that the weight of the insurance business on the economy is stagnant for a while. So it means that insurers have stopped to innovate the products. So they have not been so good at creating new products that transfer risks to the new areas of the economy. You will have later a session on cyber. This is a perfect example. You have gig economy. You have many areas, all the insurance around intellectual property, around the digital assets that are not the property Insurers are great to insure property. They have divisions dedicated to insure physical assets. So I think that this will be the area where to grow in the future. So this is a concrete opportunity, an opportunity that insurance incumbents can address, but if they will not do, this will be the area where newcomers will enter, or startups, what is commonly considered the archetype of an InsurTech, will try to address directly.
Well then, take care, insurers. Don't miss the opportunities and don't miss the chance to innovate your business, really. Thank you very much, Matteo. If some of our participants have questions for you, I hope you will remain together with us a little longer if you can. If some of you have questions for Matteo, please feel free to address them on the chat, or I don't know, raise the hand, be here. Otherwise, until we will have something coming from you, thank you for the time being. Hope to see you soon again. And if you have time, please remain a little bit longer with us. We are coming now to the program that we have initially announced, and starting with our first speaker listed is Mr. Tausche, as I said, Chief Insurance Officer for Generali Romania, and today representing also UNSAR, the National Union of Insurers here in Romania. And I asked Ales to talk to us a little bit, give us first the big picture at market level, and then speak maybe from the experience he had accumulated by working for Generali.
Hello and good afternoon,
Welcome.
Daniela. Thank you for having me. It's a pleasure also to address your, let's say, followers and your spectators. From my side, I don't really want to give you, huge theories and strategies and this kind of stuff, but I will rather try to give you some, let's say, practical insights as I see it from my role of the Chief Insurance Officer. So it's more about the position of an insurer. I believe Laura afterwards will address also the customer part more, but I really want to provoke maybe some of your thoughts with what I see important as for the digitalization. If you don't mind, I have, I think, 2 or 3 slides just to support what we are talking about. Just tell me, Daniela, if you see this slide.
Yes, of course.
And hopefully it's also readable.
Yes, it's readable. If maybe you should push an F5 to make it screen wide, bigger.
We are there.
Okay. Okay, better like that.
Better now?
Yes, it's better now.
Very good. So just to provoke a few thoughts, let me first start with the, let's say, first thought, which inevitably goes in hand with the digitalization. What I'm saying, IT, and we can also say it is all about money. I think what really matters in the end when we speak also about digitalization, it is the financial aspect. I'm not gonna comment on it too much afterwards, but definitely innovation is costly. Solutions are costly. If you want to do a full-fledged implementations, then it's really, I would say, the key critical element to somehow financially make sense also to all the undertakings. Because I'm coming from Romania, or our operations are in Romania, I'm specifically addressing the regional view because I think this is even some peculiarities in this specific region. If you look on the statistics published by Exprim, which is the Romanian publication, definitely the Central and Eastern Europe, it is a region to be in. If you look on the purely penetration of insurance degree on the domestic products in the countries and overall in the region, if you look on the average density per capita in the region, there is potential, definitely. Therefore, probably here what we will see is more and more investments. But again, this has a downside. Not all the implementations will pay off simply because you are not able to transfer everything into the premium increase. And here comes the reason why I said it's all about money. I think we are all working in the financial industry and we follow the return on investment principle. So you do better your calculations before investing into the innovations. And I think one of the major challenges is the innovation has to make sense to you financially, but also you should have some kind of logic behind. I think what is even more peculiar for this region actually is consisting of fragmented markets. You have markets like Romania, where the degree is even below 1%. People pay less than 200 euro per policy per year per inhabitant. On the other hand, you may have more mature markets like Poland, like Czech Republic, where the situation is different. But what it is facing, or what we are facing as a challenge, then some of the solutions, some of the innovations, they really are not, let's say, making sense from the investment point of view. What we see, on the other hand, as an opportunity, many of the countries are developing their own solutions. There are InsurTech, smaller companies, there are insurers investing in various countries. And I see this as a small incubator of potential solutions. This, I think, is a huge opportunity and a source of potential solutions, this CE region. Nevertheless, if you purely look from the P&L perspective, you also have to bring the innovation budgets in relation to your top line evolution and do your calculations. Having said that, I think this is very important, but I don't want to make, let's say, this discussion all about money, but definitely it is an important aspect. Having said that, I'm moving further, and let me touch some thoughts here regarding the evolution of digitalization. Everyone was discussing, and I think it is true, that the pandemic has contributed to a much faster, much more rapid development of certain digitalization solutions. But I think also insurance was before investing into IT, into platforms, development of customer solutions. What, however, changed, and it is also evidenced by some consumer trends researches done by EIOPA, I think the pandemic brought us into a situation where more insurers became aware of the inevitable link to the customer through the digital distribution channels and digital communication. So I would say, from all the possible areas of development, the pandemic caused the effect that it was really inevitable to invest into the distribution part and into the customer servicing, simply because of the fact that at a certain moment in time, your agencies, branches, they were closed for physical contact, and you had to communicate with your clients. If you did not do that, your business dramatically fell down. Of course, on the other hand, I would say that insurance model proved, let's say, reluctant to, let's say, drops and major changes related to pandemic. But I think nevertheless, across the markets, we saw some double-digit decreases. If you look on the research, the rest of the potential implementations, innovations, almost forgotten. What was striking out of this EIOPA report, many did not have a clue. They did not know, they did not provide any kind of response. Only some started to debate also about some business model innovations and adjustments, which will be enabled by the technology. And the rest is really fragmented, probably because of the preferences of the respondents. So this, I would say, was the main pandemic effect, which somehow, no surprise, leads me to how I perceive also how we see also the digitalization happening. The three main pillars exist at this particular moment, and they have reached a different level of maturity at a certain moment. Definitely the most important one, because it's virtually vital for any kind of business development in the future, and also to overcome the pandemics, it's the distribution. I think this particular part of the insurance industry value chain that is almost there. I think we are even into a maturing phase, because I'm sure across all the regions, across all the continents, people can now buy 24 hours each day solutions via online, via their application. One aspect I want to raise in here, I don't think anymore it's a question of the young generation, because this was very fashionable, but I see it from a different angle. I think it's a complete change of the lifestyle, because if you look what pandemic was bringing to all of us, basically our working and most of our non-working lives have virtually moved into our home offices. This means into our living rooms, bedrooms, etc. So I don't think it's a matter of young generation or old generation, but this is simply a need we have to have. This comes with the number 2 and number 3 claims. This is the area where I think majority of insurers already invested, again, being supported by the effect of the pandemic. I think Romania very well progressed in the video inspections, self-inspections, notifications online, direct communications with customers without papers. And I think, again, here it's a very big progress done. And also, if I will put it like this, in terms of possible improvements, I think we are getting to some level of maturity also in the claims area. The benefit in here, what I see, it is that somehow the implementations in the claims area, at least to me, seem more simple, because you are deploying unique solutions, but not so, let's say, complex in terms of integration to the core systems and to the data. They are typically for transferring of information from the customer to the insurer in order to settle the claim. And the third one, obviously also progressed during the pandemic even more, is the customer support. Same story like distribution and claims. You want your customers to do their administration by themselves. Therefore, you allow them to do certain type of modifications online. I think the minimum, the very minimum base is they at least have an information about the validity of their policy and eventually about the status of their risks, eventually claims being paid. I think this is where already most of us in the insurance industry are. What I see as a uncharted water until the moment, although there are some signs also, I think what will be the big game changer, and here I see the possibility for newcomers to come with certain solutions, it is the area of the product and service to customer design. We have an amount of data, we have all the possible views, we collect a lot of information, but where we are struggling with at the moment, it is the way how we are transferring it into the product design and the service design for customer. I will tackle it on the, let's say, next slide. But one of the reasons why I think this is the problem, here comes the issue of the complexity of the financial investments needed, because here all the digital tools, they must be integrated into a, I would say, system, into a structure, but I don't mean only IT system. I mean the overall system, the overall, let's say, setup of the business, so that it makes a full sense. You know what data you collect, you know how to work with them. Based on the data you are able to construct your services and product. Based on this, you can do your pricing. And of course, based on this, you can deliver services to the customers. Here, second thought, I think the space for, let's say, disruptors is relatively limited. They can take part of the insurance value chain. They can provide isolated solutions. Maybe they can do some niche specialization, but compared to the big insurers, traditional ones, which are eventually composite, life, non-life, health, whatever other insurances, that is gonna cost a hell of a money. Plus, they will have some disadvantage with all this missing data, because let's face the reality, it takes some years to create a base for any kind of development. So that is how I would see the impacts of the digitalization and where I think we are. And here it's just some thoughts on what are all the possible spaces of usage across the entire industry chain. I think I have already spoken about the sales distribution there. What I'm envisaging to see, maybe we will change the devices, maybe we will change the setup, maybe some different programming language and some different technology will come. But I think the concepts of 24/7 availability, one-click insurance, digital processing, fast quotations, they are all there. We have, many of us, we have the solutions really well developed. And I think clients, if they really want, they can nowadays really get their insurances online without any problem and with relatively reduced costs. The same claims management, I mean, here, no debate. We know the faster you pay, the better it is for the customer. And we go to this direction. Maybe here one area to still work on, but here comes the level of investment and the financial aspects also into play, is the usage of the big data to prevent frauds, to anticipate some claims, and even to prevent some claims, which I think would be the ideal situation to reach. So that we are actively telling to the customer, now you are under imminent risk of some claim, you can do this and that to prevent that claim. I think that is the ultimate usage of technology in claims management. And what remains besides of the post-sales servicing, what we already also discussed, is exactly this area of product design and underwriting. How I envisage the future of insurance, theoretically, I don't know if this is going to happen during my era in here, but theoretically, one day you will be able to buy insurance from one day to another over your phone whenever you need it with the proper price, and still it might be profitable also for the insurer, because we will be really good in doing the underwriting algorithms, risk selection, risk prevention algorithms up to the claims management. But I think this is something which, as I said, will take some time, also considering the at least CEE region specifics with the fragmented markets, with the relatively low levels of premiums, again, because this is going to cost a lot of money and efforts, and I would say brains and also manpower to develop in the future. I think, having said that, these are the main thoughts I somehow wanted to bring up. Definitely, there are opportunities, immense opportunities. I think all of us are investing into the digitalization. Maybe we have all the different reasons. Some of us are looking on cost efficiency. Some of us are looking on, let's say, growth of the volumes. Some of us are looking on both. It's a matter, in my opinion, of how you choose and how you define the digitalization and all this innovation strategy to make sense for you. If I will put it from my experience and how I see it, I saw, and believe me, I really did, I really saw many solutions in the last 5-6 years, really many, in claims management, in fraud detection, in sales, in whatever product designs and underwriting related measures. But unfortunately, I did see only few real solutions, integrated, innovative approaches. So there are many companies coming with one tool. This is a wonderful product which we have. But if I'm trying to make a sense out of it across the entire chain for our company, that does not really fly. We will invest, we will try, but at a certain moment, we have to be again reasonable, and we have to limit the number of tries and to say, this is the way how we want to implement, this is the way how we want to build our insurance for the future. And I already commented, this goes across all the potential elements of our business model. People, their training, their skills, it goes through the systems, it goes also through the organizational setup, data management, and. So with this, I leave you in here. It's really a challenge. I mean, it is a challenge. It's progressing, and I hope also I will get some interesting insights and questions from your side to maybe further shape up my view on what digitalization means for the insurers. Thank you, Daniela. I hope it was understandable.
Thank you also very much, Alice. We will further talk because very soon we will have a panel of discussions. I already took some notes from your speech, and I'm waiting anxiously to ask you some questions. But until then, let's also hear from Mrs. Laura BALOI, Head of Digital and Customer Strategy for NN Life Insurance here in Bucharest. They are the most important player in the life and health insurance here in Romania. And as far as I know, they have a lot of novelties in this field of the digital interactions with customers. So let's hear from Laura.
Hello, everybody. I hope that you are hearing me, first of all. And
yes.
I'm glad to be with you today because, especially because this is my first, participation to this event. And on the other hand, I'm very pleased to discussing about the digitalization of the insurance industry and about our company's vision and strategies in this area. Thank you, Alex, for your presentation. It was very insightful, and indeed, I would try to add somehow a customer perspective, the layer of the customer when it comes to insurance in Romania. And I would start by looking back to the last decade when digitalization was like a common theme for all the industries, of course, with different adoption speed. Insurance industry, at least in Romania, had kept a more traditional approach, but starting to recover its gap during the last years. Somehow, March 2020 was like a boost for us, because it was the start of the shift from a shy and more traditional evolution up to this boom that have transformed not just our business, but our lives as well. So if asked today, I would not consider any more digitalization or business transformation as trends, but I would say that they become our business as usual, and it's more about adapting to our customer needs and expectations rather than still considering it transformation. So besides on top of the market dimension that Alex presented earlier, I would like to add some figures about Romanians' behavior toward digital adoption. And we know that Romania has 99.7% 4G coverage today, is the sixth best internet speed worldwide, and we have 77% smartphone penetration. On top of this, when it comes to social media, for example, the figures are skyrocket, because according to global media report from 2020, the Romanians were spending more than 2.5 hours daily on social media. So this is our reality, and that's why our focus in the last years and a half was on how we can capitalize on it and transform it into a business opportunity, of course. And we found a very short answer, let's say so. And the answer was to keep an open dialogue with the customer and the prospects, to personalize and to accelerate, because acceleration and adapting to this new reality was a must. And now, specific about NN Romania, indeed, more than 2.2 million Romanians, so this is almost a quarter of the active population, has an insurance or pension provided by NN. Therefore, our strategic priority was to become a digital company in an industry that is still under digitalized. And that's why our investments in 2021 was directed towards towards digitalization. Today, we are integrating multiple digital tools, starting from our website to our self-service app, campaign automation tools, platforms and solutions, all of those solutions being cloud-based, and allowing us to create an elevated experience for our customers, to enable them to connect with us with their products, and also to give us the space and the speed in order to very fast react. So to take our mission further, because we heard about innovation early from the other participants. We didn't stop just to our internal skills and capabilities. And I don't know, we kept our curiosity very high and always looking over the fence. And for example, we are combining today our strengths, internal strengths, together with the skills and the mindset of innovative startups, because we join forces, for example, with organizations like Romanian FinTech Association. So we cannot say that we just need to look to the insurance and what the other insurance in the world are doing, but to identify potential, I don't know, other products, InsurTech and other technologies to adopt in order to become more relevant for our customers. So all in all, these aspects combined are somehow our vision, which is focusing on five pillars. So today our customers or potential customers, of course, can reach a tied agent via video calls, no matter where they are, and the entire process are fully remote. We upgraded our campaign automation capabilities to be able to communicate in a very personalized way and trigger-based with a very fast pace, while empowering the customer through our self-service app to have control 24/7 to all their products and services. On top of this, having this growth strategy when it comes to customer-facing channels, of course, we need to back up somehow the processes, the back office processes, and we started to automate our back office processes. That of course reduces the risk of human errors for larger activities, and to give our colleagues the opportunity to focus more on added value activities rather than, I don't know, manual stuff. On top of this, data is the most important aspect today for us, because it's the answer to our obsessive question: how do we make sure that we are relevant for our customers in the right moments? And what we've done was to integrate our digital analytics, because we are gathering a lot of data about our users, and also together with the behavioral data that we have, through machine learning, we started to anticipate better our customer needs, and of course to anticipate better, I don't know, future actions or products offering and so on. And last but not least, of course, technology, which is the best enabler for our plans. We invested a lot in I don't know, latest technologies in order to give us the agility and to open us, I don't know, new opportunities. I would give you, I don't know, in a few minutes, just a few minutes, some examples of what were our investments and improvements for the self-service app, because it was our greatest enabler in terms of customer relationship. So basically, NN Direct, we invested in it since 2 years now. We had a series of releases, and what we brought beside, I don't know, just the product display, product portfolio display, because today the customers are able to see not just their insurance or their pension, but they can see the products, the group products or the insurance that they bought through a bank. Today they can see their contractual documentation, so it's like a digital library. we added the payments for all the business lines, and we somehow enabled the payments by adding the feature of saving the card, and just by one tap, the customer can pay on the spot all his premiums. On top of this, we enabled the data update, because it's very important to give the customer the speed and the access of updating his data, not just DID, but contact data. And we move towards claims, for example, because claims was mentioned. And today a customer can announce us an event in just 5 minutes, and he's receiving a response to this claim in no more than 24 hours. So long story short, those are the most, important improvements that we brought to our self-service app.
Well, it seems that at least for the digital educated customers, the interaction is very easy to be done. And so the sales process, at least, and after sales services can work very well and very efficiently. What about the less digital educated? Because it is right, we have a very big penetration of high-speed internet, lots of phone calls, but in fact, besides using maybe Facebook or something like this, many people are not able to send an email or to make a real transaction online. What about this one?
Yeah, of course. So we are covering, the whole palette of segments. And when it comes to less digitalized segments, of course, we have our tied agent force. So we have more than 1,400 tied agents all over the country who are able to interact face-to-face with a customer. Because from the latest figures, for example, 50% of the prospects, indeed, they would like to interact via online. So I don't know, Teams, Zoom, whatever. But the rest of the people, of course, they would rather prefer to meet face-to-face with a person. And that's why we are covering this through our tied agents. We also have fully digitalized processes when interacting with the tied agent. So basically, we are focusing more on identifying the needs and to identify which is the best product for the customer, and spend very few minutes on activating the policy itself. And of course, when it comes to payment and further utilizing the products, we are trying to cover the entire set of skills, let's say so, according to the customer segment. And we are offering different type of payments, or if a customer wants to change something on his contract, they can easily call to our contact center. So basically, indeed, we are trying to offer to everybody access to the products that today are considered, I don't know, like a luxury or something that is not for everybody. But yeah, it's a matter of time up to the point when we will increase that penetration of a bit more 2% that is today.
Okay, let's hope so. Thank you very much. At this point, I think that we will officially consider opening the panel of discussions. So I will kindly ask Ales and Kobi to join us with opening the cameras and start our discussion, or continue our discussion if you want so. As a first step, I would say that listening to Laura's presentation, I remember one thing that I read in many parts, and it was a common conclusion that however digitalized or however deal of technology is put in the insurance process, in the end, it is something that needs also human contact, empathy, a lot of things considering the human nature. But because we are still here on this play field of the technical solution, indeed, as Ales was saying earlier, there is a huge offer. I think it's something that you have just the embarrassment of choosing something fit to your needs in this ocean of lots, thousands, tens of thousands of possible solutions and choices of digital tools. And in this journey, I think there are some critical aspects, or what I would like to know from you is, what do you think are the most difficult aspects of this digitalization journey? Thinking the strategy, choosing the tools, I don't know, setting the objectives. What would you?
Thank you, Daniela. I mean, from my side, if I may not to steal from the colleagues, I think in principle there are two questions. One of them is, what is your business model? How do you service your customers? I think these are two principal questions, because as I already said, and you very well repeated, there is plenty of solutions, and you can go into the trap that you buy something what you don't need. And therefore, how to get out of this, you have to answer these principal questions of yours. And I think the winners of the future will be the companies, entrepreneurs who can really offer some interesting customer journey with some value added, either through the insurance product or services. So again, I think it's the beginning. What do you want to achieve? How you want to deploy the digital tools in your business? That's critical from my point of view.
From here starts everything. And another thing that I would like to find out from you and from Laura is related to the absorption of this new way of interacting with customers in the corporate culture of the insurer itself. Also, what I was asking Laura early, how important is, when establishing the digitalization, let's say, strategy of a company, the level of digital competence of the potential customers in the country where the company is operating? Would you say that cultural differences from what you have seen in your group, both of your groups are active in almost all the CE countries, cultural differences between these countries are important in the way the things are done, also in respect to digitalization?
Yeah, I can I can answer first to this question, and somehow to tackle the previous question as well, because I think personalization and localization, it's a must. So indeed, we do have I don't know, group guidelines and common strategic directions, but in the end, the customer is the one that is choosing an insurer or another, or I don't know, a provider for no matter what services we are talking about. So yeah, localizing and personalizing and understanding each customer, because again, going back to the customer, we have a lot of researches or focus groups and talking with the customers or with prospects. They all are saying that they do not want to feel like a whole anymore, but they want to feel unique and special. And somehow this is a differentiator between a provider or another. If we can use the digital environment and the data in personalizing the customer interaction, it will be like a differentiator. And indeed, we can say that we will have a positive return on investment when it comes to digital. So from my perspective, it's all about personalization and localization, and not about, I don't know, very, I don't know, global views and directions. And yeah, this is the culture actually in an end, that we need to localize everything and to personalize everything in order to have the best outcome.
Do you agree, Alice?
I will build up on this. If you would ask me if the, let's say, corporate culture plays a difference, I would answer no. I don't think so, because I haven't seen that big differences. On the other hand, oh yes, I saw big differences, but this is probably more related to the continents, because what I saw in Asia, the solutions they are using is completely incomparable to what we were doing in Europe. But again, I don't know if this is what we want. If I take the Greater China, is it something we want to apply also in Europe? Maybe not. But that leads me back to the business. I mean, where I saw the difference inside of the group, it is in the way how the innovation was understood. Some, even within our group, they really take it as the future, and they invest all the efforts into adjusting the people, the corporate culture, the processes, the systems, and they really have it as a leading motto, and it's supported by a huge amount of money. Then you have some which said, okay, maybe let's test. We had some examples where these innovation companies were put like startups besides of the regular insurers. So this is the kind of different approaches. And yes, I think the way how you approach the innovation and the digitalization topic is then also defining the outcomes of it. And at the moment, still, I mean, overall, we progressed as a group. We did a huge step, but I don't know, until now, I didn't see like, you know, a new super fancy, innovative solution within. I mean, we all progress, but the difference is for the moment early to say probably what will be the success, because it's true, we are in majority of the markets serving live, non-live customers, young, old, whatever. So probably here, that's why I said also in the beginning, if you have to serve the large portion of customers with different needs and expectations, you probably have to be ready for the future, at least for some time, to offer different channels, different communication opportunities, different solutions for the different segments of customers. That would be the answer.
So variety and the personalized approach remains something important anyway, regardless of the actual tools that we are using. I would like to take a small detour from the current discussion to the world of InsurTech, because both of you have already mentioned InsurTech as potential partners in developing digital business and maybe helping to the growth in different areas. And let's hear from from Kobi, from Mr. BENDELAK. And why this? Because Israel is well known as one of the most flourishing InsurTech environments. And I would like to understand how it became so successful and so flourishing, and how is this environment interacting with the classical insurers in the market and helping the market as a whole to develop and to grow. Kobi, please.
Okay, thank you, Daniela, and thank you to having me here and to invited me to this great session. Yes, Israel, the ecosystem, the InsurTech ecosystem in Israel is really flourishing and really active. We have here more than 200 InsurTech startups. It's amazing. Very active ecosystem, and there is some reason for that. First, Israel is as we call it, and a lot of people around the world call it, it's the startup nation. The InsurTech is part of the startup nation, so it assists us very much a lot to grow. So first, to be an entrepreneur in Israel, it's easier than other places around the world. the infrastructure here to build startup, the environment to be entrepreneur is easier than a lot of places. There's a lot of support from the government, a lot of good technologies. People are arriving from the army units or intelligent units. There's a lot of capital here, a lot of global. Most of the biggest global entity companies, corporates have a developer center here in Israel. So it's easier to be here an entrepreneur. You know, there is a, and if you want to add it, it's the culture to be entrepreneurship people. You know, there's a joke in Israel that in the previous days, the Jewish mama wants her daughter or her son would be a doctor or lawyer. Now she wants that her daughter or son will be entrepreneur. So this is the culture in Israel. People wants to innovate, and if the infrastructure is easy or make it easier from other places, it's cool. So this is the basic, or this is the base for to open a ecosystem here in Israel. But based on that, any ecosystem needs a success stories. And in Israel, we have a lot of success stories, and especially in InsurTech. I don't know if a lot of people know, but Lemonade, Hippo, Next Insurance, Ernix, Atbay, and all these unicorns came from our ecosystem. All these success stories assist us to grow a new and very active InsurTech startup. The last thing is that InsurTech is not just technology. From my point of view, it's even before a great solution for a problem, or create or solve or find a great solution for a problem, and then implement technology. And the Israelis were known in creating and so, sorry?
Please, somebody, excuse me a little, Kobi. There is somebody with a microphone open. Okay, please. Okay.
Okay, that's fine. Now I can hear you. So the Israelis know how to solve problems. We, as you know, we live in a very tough neighborhood, so we need to be, we need to know how to solve problems. So based on that, in the InsurTech is solving problems and implement technology. This InsurTech here in Israel is flourishing. I hope I answered your question.
Well, yes, it's clear. I understand that the environment is encouraging, and maybe also it's your nature more innovative than in other parts of the world. But I had some opportunities to see a number of presentations. Oh, I would like to ask my colleagues to mute everybody except the panelists. Okay, sorry for that. Somebody entered the last minute and had the microphone open. So I saw during the time some presentation made from by InsurTechs from Israel on very interesting topics and presenting some tools that would be very helpful in developing or as an valuable add-on to the travel insurance products or health insurance products. Do you have some idea how much or how strong is this interaction between InsurTechs and the traditional insurers, and maybe some successful examples in this regard?
Okay, yes, of course. So first, in Israel, the insurance companies are very advanced, but the startups are not looking especially to the Israeli insurance market. The Israeli insurance market is very small. We have 8 million people here in Israel. If you compare it to US, it's one city. So in the end, the Israeli insurance industry is very small. Adopt a lot of new technology, open mind, changed the mindset. A few years ago, we have here a few digital insurer. It's because the regulation is very light for digital insurance companies. You get a license just for $3 million. So it's easy to open digital insurance company. But when we are speaking about InsurTech in Israel, we're speaking about the solution for the global companies, for companies around the world, in Europe, US, in Asia, and etc. So when we speaking about the ideas or new ideas, I must say that in the beginning, start from the evolution of the InsurTech. So I think we are now in the beginning of InsurTech 2.0, the new generation of InsurTech. Because still today, the most successful InsurTech startups, Lemonade, Hippo, and others that get more attention and a lot of focus, were startups that assist to digitize the insurance industry. So most of the startups that have a great success until today, the startups that took the same traditional process and make it digitized. And this is what we are seeing in other insurance companies around the world. A lot of tasks, a lot of movement from tradition way of doing business to digitize process. So this was the InsurTech first generation. Now a lot of insurance companies around the world are digitized, or part of them are digitized. A lot of data is indexed, and now is the time for the InsurTech 2.0. So the taking the data, taking the insurance industry for a new generation. And I can give you some example. Let's speak about two startups, very great one, not unicorn until today, but they will be. The first one is Bina. I know that some people heard about Bina. Generally, Europe use Bina as a tool. It's a great solution, come from the Israeli intelligence unit. It can predict your health by taking 20 seconds video of your face. It's like science fiction. But if you take a video of your face, even by Zoom or television, not must to be your telephone camera. It can be even by other third-party assistant. They can assist your health. You can assist the blood pressure, cholesterol, the diabetic, your stress level, heart rate. A lot of great information coming from this tool, and all this information is very helpful for two kinds of insurance topics. One, the wellness, and the second is the underwriting. So imagine that if you want to have life insurance in the coming future, or it's not future, the coming years, you just take a video of your face for 20 seconds, then you will get a quote and approve it and have a cover for a second. And you can add it for the retention. The insurance company can keep the healthy clients by using that application, and etc. etc. This is a great innovation. The second example, it's coming from another topics, the P&C insurance, or the commercial insurance. It's a great startup called Emotion. It's a startup that developed a AI solution that can predict a critical acclimate situation like flood and things like that around the world 6 months in advance. Can you imagine it? They can predict that in Germany, in North Germany, there will be a big flood in, let's say, in November, next November. So can you imagine what you can do with this tool? If the insurance company and even the world will know about a critical acclimate situation, they can prevent a lot of damage, a lot of property damage and health and life damages. So this tool is coming from Israel and assists the insurance industry, and even more than that, to be ready for the next generation. So this is two examples that came from Israel that take the InsurTech industry for the next generation, as I said before.
Well, to me, as a non-professional in this field of business, it seems rather science fiction for the time being. I will be very careful to make a phone call to Bina if I don't want they to find
Be
out I have a
careful with
little
phone
bit.
call to. Be careful with the telephone with Alice, because he is from Generali and they bought this solution.
Okay, so let's. But because you gave this example, which is very close related to health insurance, I will. I would like to come back to the Romanian environment and talk a little bit about health insurance and life insurance, both lines of business with a huge potential and to which there are very big expectations linked, but that are still behind their potential. And I was wondering if this rush towards digitalization and improving with and bringing the products closer to the potential customers in a digital way can help this line of business to advance a little more and to grow a little faster. What do you expect, Laura, for instance?
Indeed, for example, yeah, we have there is a huge potential in a very low high penetration, because it's I don't know, around 2.3% when it comes to life insurance or health insurance. But somehow after this pandemic, for sure, our appetite and our I don't know, the needs towards keeping us health and also to keep up our financial security, it's more and more on our radar. And I do not consider that just, I don't know, giving easy access to the products to the customers, or just enable them to use their products is the key to increase this penetration. But it's our duty, first of all, to make the people much more aware about the benefit of having an insurance on one hand, and on the other hand, to create this, if talking about health, for example, this health ecosystems, because health insurance should not be just about using the product when something wrong happens to you, but it's much more about keeping the customer's health. That's why, for example, creating these ecosystems, because today we are using the mobile phone a lot, and we are using health apps, we are using smartwatches and monitoring our blood pressure and our how many steps we are doing daily. Somehow this is the way in which digitalization should impact the product itself, by creating this type of ecosystems and offering to our customers value-added services and focusing more on prevention.
So in the end, is a change of paradigm, would you say, in the insurance business itself, from just compensating the loss to preventing the loss and helping the customer to avoid the loss, if possible.
Yeah.
Would you agree, Alice?
Absolutely.
I think it works also in the non-life.
No, I think absolutely. I would agree. It was very correctly said, because no matter where in Europe you are, I think the long-term trend is set. Population is aging. Now we had the pandemic, so I don't believe that the state budgets invested into health are going to be any smaller in the future. I think they will only grow. So from this perspective, there will be a need to cover, let's say, additional or ensure additional funding of the health insurance and also life protection. The sad story is, and sorry for being cynical, we all are gonna die at a certain moment, but this also is what Laura correctly addressed. I think the biggest challenge in the health insurance for everyone, commercial, non-commercial, state-owned insurers, is the portfolio management. It is the proper risk management and matching with, let's say, for example, your other areas like financial asset liability matching, etc. But it comes back to what Laura said. The best is the prevention. it is the proper understanding of the risk. That's why Generali is also investing into this type of solutions, because again, here we would pretty much love to, prolong the life expectancy, to avoid critical diseases and dread diseases, but probably this is inevitable at a certain moment of a lifetime of a person. So from the strictly commercial insurer's point of view, this is where we are heading to, understanding our risk, managing the portfolio, and if possible, preventing the risk from occurring at a certain moment.
Okay, thank you. My colleague Adriana tells me that there are a few questions from our participants, so I would like to invite her to read them, to address them to you. Adriana, are you?
Yes, yes, Daniela. I collected a few questions. First question is addressed to Laura BALOI. Do you have any estimations? How much of your new business came via the digital channels?
What I can say about this is that from a year to another, we doubled the number of customers coming from digital. So today we are talking about 2-digit percent, let's say, so in terms of sales coming from digital.
Thank you, Laura. Another question for both Tausche and Laura BALOI. Considering the whole package of digital tools you have implemented, which of them provided for the higher outcome? Sales growth, improved efficiency, most popular with consumers? Please, Laura.
So as far as I understand, the question is practically asking you to choose the most satisfactory experience that you have with implementing a digital tool. Not easy to choose, is it?
Yes, I think.
Laura?
Sorry, I had a drop in my connection. The electricity went off, so if you can repeat the question, sorry.
Maybe can Alice can start.
Let me address the question about where was the biggest impact. I think one area which we did not touch, this was the services we provided to our partners, to distributors. So all these distant conclusions of policies, electronic signature, I think here we went really far, and the response was really good. On the other hand, purely looking on the customers, obviously there was an increase in the sales, but I think the biggest satisfaction is visible when it's coming to claims settlement. But this we know why. I mean, this is independently of digital or non-digital insurer. People are usually most unhappy and happy when you pay them what they expected to be paid in the time which they have expected to be paid. So good experience on the claims side and really good response from our partners in the distribution area.
Thank you.
So I try to catch up with the question, but I think I need
to put it in a short way, the question was about which of the digital improvements that you have brought to your business was the most satisfactory where do you feel that you have seen the best improvement rate, let's say so?
I will mention two actually. On one hand, it's about the frequency and the way in which we communicated and we changed the communication with the customers, because it was very important to change from like a rather contractual communication to much more an engagement framework that we set up with the customer and keep them engaged with against their products or I don't know, novelties from our side, and the pace in which we communicated with them. And on the other hand, it was about the self-service app, because we saw the figures, I don't know, the impact in NPS, And in our retention figures, well, because offering this control for our customers when it comes to their products, making transactions, easy access, and so on. So basically, on one hand, it's about this dialogue that we are keeping with our customers, and on the other hand, it's about the control and self-service.
Okay, thank you. Are there any other questions?
Yes, I have a question for, actually two questions for Kobi BENDELAK. As a specialist, do you consider the present level of cybersecurity among the insurance companies is adequate to the digitalization push?
Right, that's a great question. Thank you for that. There is a big gap between the needs for new technology to take the cyber insurance products forward and what insurance company is implementing the cyber insurance process. And everybody knows that cyber insurance is one of the most grow product in the coming future for the insurance industry, because there's a lot of needs for that, but there is small demand in the client side. This is one thing. The small demand is coming probably from the pricing, because the cyber insurance premium is very high. It's high because the insurance company don't have enough history for making this underwriting perfect. So because of the small demand, the high premium, there's a big gap that coming, and the issues and the cyber insurance technology that coming from a lot of places, especially from Israel, can assist the industry to grow. There's a few great cyber insurance company here in Israel that develop tools for right underwriting, assist risk immediately, and assist the insurance company to make great underwriting. You can find them. You find AtBay, that work especially in US. It's a big company. Cover, Gamasec, and many more names that are coming from Israel. Assist this topic or this industry. Cyber insurance is going to be an industry very active and very well.
And we have another question.
Okay.
Okay, another question, which is a direct question for Kobi BENDELAK. Actually, do Israeli InsurTechs also have business in the CE insurance markets?
Yes, of course. A lot of InsurTech startups operate in Europe, and in Eastern Europe, Western Europe, Southeast Europe. The European market from side to side is very attractive to the Israelis because the market is very big. As I mentioned, Israel is a very small country. So in the end, they look for new markets, and the European market is very big, very modern, adopt new technology, and the most important, very close to Israel. So let's make the Israeli really focus about European. Of course, the first target market is the US market, but European insurance market is very attractive. As I mentioned, BINA, that operate with Generali, and there's a lot of more technology coming and operating in Europe.
Thank you very much.
Thank you.
I saw that Adriana left us for for the moment, so I understand from here that there are no more questions at this time. And looking at the clock, I think we are close to ending the panel. So I will go directly to my last question for all of you.
Excuse me, Daniela.
Yes.
There is Gordon Hawkes. There is a raised hand there. I can see.
Okay. So please unmute and allow the comment.
Good afternoon. So I was wondering where you saw the role of parametrics in the future of InsurTech, and I suppose this is directed both to Alice and to Kobi.
Alice, do you want to start?
Well, I don't know. That would be the answer for the moment.
I have answers.
Yeah, this is, I'm kind of catching all these questions, like people asking different aspects, particular ones. Definitely, they would be part of the whole ecosystem also in here. If I got it right, I mean, this goes beyond probably the servicing. Traditional servicing of the customers to provide maybe some tailor-made solutions, services after. But I cannot tell you I have a clear opinion where and how this would evolve.
Maybe I can add some more information. So parametrics is a very advanced insurance topic and really related to technology, because the process is that you don't have to claim. The technology can assist these tools to operate immediately. The parametric insurance means that when the events are arriving, you can predict the technology and pay the money to the clients immediately. And let's say there is a flight cancellation. It's one great example, but you can speak about earthquake, and you can speak about many more things that you can predict by or make assessment like technology. And when they happen, you will pay the insurance company will pay the money immediately. A downtown of server, it's one kind of solution that you can see parametrics insurance inside. So in Israel, there is a new advanced solution for that. And as I said, a downtown of servers, there is a parametrics insurance tech, very successful one operate in Europe in a few countries, and you can see in travel insurance new solution, and you can see in climate or crop insurance, parametric insurance. So I think it's one of the new arrival for the insurance industry.
Oh, thank you. Well, in fact, this last question gave me my cue for the final one. What do you see in the near future in this area? What trend do you think is the most important, or what is the most challenging one? What should be pay attention to in the next year, let's say, until our next conference together? What would you say, Alice?
From, let's say, an insurance group perspective, I think my perception is we somehow finish or are finishing a sort of testing phase, because we really tested, invested into many solutions. And we are moving into a phase where, as I said, we have redefined the value proposition and the way of service to customers. And what is now ahead of us as an insurer is duly implement this, let's say, new way of servicing the customers with the solutions which the group will believe in. And probably here we will see that certain solutions will be spread and implemented across all geographies where we are present. Obviously, from market perspective, business perspective, customer perspective, the percentages of digital servicing, digital sales, they will grow to some extent. And I'm speaking now specifically in relation to the CE region, because there I think we are still behind some other geographies. Thank you, Daniela.
Thank you. Thank you also, Alice. Kobi?
As I said, the next generation of InsurTech 2.0, amazing, using a lot of AIs, a lot of solution or a lot of things to assist the insurance industry to grow. There's a lot to expect. I can say one topic. Look to the future. It's not so far.
Okay, eyes wide opening and targeting this area of discussions. I'm sure that we will see a lot of new things. I think I see Laura again. We have lost you for a moment, but do you hear us?
Yeah,
Okay.
I hear you.
Then, what is your answer to the final question?
I think I don't know, the biggest challenge for us will be the use of data, because we will have a huge amount of data to our disposal, and we will have to use it in in the best way. And how we can integrate data through AI in all our processes, because data can help us in underwriting claims and so on. So basically, data, it will be a huge challenge for us, but also offers us a lot of opportunities.
Okay, so what I can understand from my side is that there are lots of things, and as always in this IT business, let's say, things are going forward at a very fast pace. So we will have permanently new things to discuss. But for the time being, what I foresee for the next 10 minutes, it's a coffee break. I think it's well deserved. We will come back in 10 minutes from now on. Thank you all for your participation so far. And
Bye from Tel Aviv.
Likewise.
Goodbye.
Thank you.
And
Bye-bye.
I expect to see you again at 3:40. Okay.
Thank you.
Thank you. Bye-bye.
Enjoy the break. Hello again and welcome back. I hope you are interested in the topic of our second part of the conference, which will be dedicated to cyber risks as an increasing threat, solutions to deal with it, legal aspects, etc., etc. And to do this, we have two special guests. It's Matt Harrison, Director, Product Management Cyber for RMS, and the advocate Giorgio Grasso from representing legal entity from Italy, Battini Traverso Grasso and Associati. That being said, my proposal for you is to jump directly in the topics of this part and start with Matt. He will talk about the lessons from the cyber insurance risks, reflections on these lessons, and the direction that we are going to in this respect. So, Matt, the floor is yours.
Thanks a lot. Hi, everyone. Thanks for having me. Yeah, my name's Matt Harrison. My background is in kind of risk modeling and exposure management. So I've been at RMS about 2 years now. Prior to that, I was at Hiscox in the London Lloyd's market, working in kind of the measurement of risk for about 15 years. And cyber has been something of, you know, pet hobby and majority of my career for the last 8 years. I thought what might be interesting is just rather than kind of talking about what we're seeing in data and how to price risk and think about that, to be more talking about where have we got to in cyber insurance and insurance in general. I think, you know, there's been a lot of conversation and concern around silent cyber. Where does cyber risk lie in portfolios? So I thought I'd kind of try and reflect to start with on the kind of the 8 years in the trenches I've spent trying to figure this through. So I suppose, you know, the one point we always get to is like, you know, where is cyber risk? And the kind of obvious answer is, well, it's everywhere. You know, there's almost no part of our lives that is not touched by IT and technology, you know, in the world today. And obviously how that technology interacts with our lives is just is uniform. It's everywhere. Probably the question then that asks for me, you know, when we're thinking about from the insurance side is, does that matter? Is just because it's everywhere, what risks are we facing? When we think about silent cyber, when we think about this kind of unintended coverage for cyber risk, really there's three issues in my mind. The certainty, which is a lot about it's a mixture of the certainty for an insurance carrier, but it's also the certainty to the client. The contract certainty. Did you intend to cover cyber risks? There's the payment certainty where you thought you did, but because it wasn't an explicit cyber policy, is there going to be dispute on whether they're going to pay the claim? And then obviously from the client side, there's a kind of from the carrier side, from the insurer's side, there's a kind of a reputational risk if people get taken to court. Why is it an issue? I suppose there's two things I'd think about is pricing and capital. If cyber risk is present within other lines of business other than a cyber insurance policy, how is that priced for? And then more concerning is, when the big cyber event happens, how much aggregate, how much capital can that consume? The issue, though, is clearly one about coverage, and it's not necessarily about the exclusionary language. It's just about how much cover are we giving. So, this is, I drew this up as obviously it's the biggest, made up graph ever, but a kind of a reflection on, I suppose, how I've observed people's thoughts around cyber risk, especially when it comes to silent cyber over the last, say, 10 years. At the start of the journey, there's kind of no knowledge about what cyber risk is, so there's no fear. But people start digging into it and suddenly realize that cyber risk is everywhere, and the fear just grows catastrophically. And you're almost in this position where carriers and insureds and clients and everywhere, there's this kind of panic and paralysis. Well, we've got cyber risk everywhere. What does that matter to as a carrier? Then you kind of have the action phase where you start to think, well, actually, we need to do something about this. Do we need to update contract wordings? Do we need to buy reinsurance? Do we need to understand what the risk is? And then finally, there's the kind of, you've got to a point where when you've taken some action, you haven't solved the problem because the problem's unsolvable, but you've learned enough that you're comfortable with the risks that's been taken, and you've done some remediary work to it. And I think part of it is, I remember probably 8 years ago working in the Lloyd's market, and both the mixture between Lloyd's and the PRA, the UK regulator, getting very scared about cyber risk and us wanting to exclude it everywhere. But it goes back to this question around coverage. What are we covering? There is cyber risk inherent in a lot of different types of policies, but for many of them, the set of circumstances that need to arise for a cyber loss to trigger coverage, so a claim is made, is so small that the real risk is very small. Predominantly, this is when we're thinking about liability lines, or if it's a third-party coverage. There's a clear difference here around first party. When we're talking about business interruption, where we've got business interruption in say, a property policy, and there is no cyber exclusion, then I'm starting to get very scared. But almost anywhere else, I think, the market has come to a consensus that actually this isn't as scary as we first thought. If we think about, obviously that's the messaging in silent cyber, where maybe it's been ubiquitous, but it's kind of understanding where the risks are. Obviously, when we're writing cyber insurance, it's actively taking that risk on. But cyber insurance has been a completely dynamic risk in itself. When cyber insurance started out, it was very much trying to respond to stolen data and data breaches. And the majority of the policy, the coverage was liability. It was third party. It was if you'd been sued or you needed to notify people and certain amounts of expenses and litigation. That evolved, and sort of 2018 was probably, ransomware was starting to ramp up, but we were seeing the kind of the business email compromise, the crime attacks, essentially. People, the fake president fraud, getting people to wire money to other through digital means. And then obviously the last couple of years, cyber insurance has really just been driven by ransomware. And that always asks the question of where next. I mean, right now, that if we think about the threat actors and what they're trying to achieve, it's pretty predominantly, it's always been, from a criminal perspective, monetizing attacks. To start with, it was stealing data, but data is only valuable when you then sell it. Stealing cash is easier, but it turns out that that can be quite difficult, whereas extorting to people to pay you cash is easier still. I mean, there have been spates of cryptojacking where people hijack your IT infrastructure to mine for cryptocurrencies, but the returns probably aren't as effective. But from an insurance perspective, the loss incurred is low. So how relevant is it? So I don't know. I think if we're looking to the future, it's hard to see past ransomware right now. But obviously that means cyber insurance has evolved from being something that was based upon litigation to something that is very much business interruption and first party driven. One of the things with the kind of the ransomware, the spate of ransomware losses that we've got, always makes me think about market dynamism and cyclicality. I think the last panel, we're talking about some of these things. We typically have market cycles where prices increase and decrease. The market cycle is typically driven by capital. When I'll briefly go over it because I think most of you are probably aware. When insurance loss results start to go bad, capacity withdraws. That reduction in capacity decreases competition. The losses increase, and eventually get to this point where everyone's hurting so much that the tables turn and the prices increase. Prices keep on increasing, people make more and more money, so more and more capital flows into the market. The more capital flows into the market means there's increased competition. People are still competing for business, so they have to lower prices. And so the cycle starts to decrease because people start to lose money, so capital withdraws. That's the kind of classic insurance cycle. But cyber insurance has kind of potentially introduced a new paradigm here. In 2019, the demand for the product was increasing all the time. The need, especially for the financial losses that people were incurring from ransomware, were just getting more and more impactful. At the same time, more and more insurers were piling in. So this isn't a classic soft market. Demand is rising and capital is still moving in, but the results getting worse, not because the pricing was because of too much capital, is because the risk was changing. In most lines of business, it is unusual to have significant changes in risk that change on the day to the week to the month basis. Most risks don't really change that much. So we ended up in essentially what we can think of as a soft market, just because the market was losing money very, very significantly. And clearly, when the market loses money, people change underwriting appetite. They withdraw some amount of capacity, but the hard market follows, even though the demand is still rising and the capital is rising. So as a kind of an insurance problem, cyber insurance will have to adapt to this new paradigm of a changing risk environment, as well as a changing capital and pricing environment. At some point, the risk may decrease, in which case we can reduce rates but still maintain profitability potentially, which again is an unusual thing for us to experience. I suppose my final slide, which is possibly at odds with one of the last panelists, was, you know, we see a lot of in InsurTech, where people sort of try and pose this as, is cyber insurance a technology problem, or is it an insurance problem? And I think where we have to get the blend right for me is that cyber insurance is always an insurance problem. You know, how we understand the dynamics, the competitive landscape that insurance needs to exist in is an insurance problem. But technology is just a new vehicle for measuring the risk. It's not necessarily the vehicle to price the risk, and it's not necessarily the vehicle to figure out how the market responds and works. We need to understand insurance well to be able to do cyber insurance well. You know, market cyclicality is an insurance problem. It's not a tech problem, but we need the tech to help to think about data. But we have to be kind of mindful at the same time that, you know, when we're thinking about pricing risks, the bench line is always at the portfolio level. If we over optimize our pricing models to the individual, the kind of basis risk that we take on is almost too high to bear. The error margins are so high because the uncertainty is so high. And cyber is not necessarily a data problem, because it's changing so quickly. We're never going to get to the most precise piece of data to measure the risk. We never do in normal insurance. We think at the portfolio level, we understand how the general dynamics are going. Cyber risk is expensive, not because of really the uncertainty, it's because the risk is really high. I mean, if cyber insurance was expensive and it was just expensive, the insurance carriers would be making hilarious amounts of money. Whereas over the last 3 years, some of them have lost quite a lot of money. The pricing is the response to the threat and the financial risk that it experiences. Though it's a hard market, there is some kind of uncertainty baked into that. It's not profligate. This isn't a kind of a total excess of the amount of pricing. So I suppose the last point is, where is this going? You know, I think we've all realized over the last 2 years of, you know, predominantly working from home, that technology is one of the things that's keeping many businesses alive. The demand for cyber insurance is just only going in one direction. Pardon me, I think it was only earlier this week that there were Gallagher Re published a study talking about how cyber reinsurance premium could one day be bigger than property reinsurance premium. The risk itself is only going to increase, and our reliance on technology is only going to increase to the extent that this market will grow and become more and more and more important. It started off very small, and it takes a long time to get there. With that, I'm just going to say thank you very much for listening for now, and I think I will be joining you later on the panel.
Thank you, Matt. Thank you, Matt. Yes, let's have a look over certain legal aspect in cyber insurance. Obviously, as already shown by other speakers, this is a growing risk, certainly. Given the increasing sophistication of cyber attacks and the large settlement attracting significant media attention, there is likely to be an increase in litigation in relation to cyber events around the globe, including class action lawsuits, depending certainly on which country and jurisdiction you are. And the legal landscape relating to cyber risk is currently disjointed and uncertain, and the lawmakers, regulators, and courts across the world are developing rules and new precedents relating to cyber risk on reactive basis. And these has resulted in patchwork of laws, regulations, case law, trends, and an environmental that makes it difficult to estimate future costs that might result from a cyber losses that are likely to occur. And also the outcome of cases is highly variable and depends heavily on the specific language of each insurance policy. Not only the language of policy itself, but also the particular state and the federal and national law in place, and the fact that the claim as well as the courts willingness to find coverage. And the erosion of this standard case law is a concern to lawyers involved in cyber litigation. Historically, data breach suits were dismissed if plaintiff could not show articulated damages. But recent cases are overturned this issue. And anyway, there are thousands of organizations that have suffered cyber incidents, but since a few years ago, only few are well known. Why? Because a change of the legislation, because nowadays GDPR, for instance, legislation obliged to notify in certain cases if a data breach occur. And obviously, this is an issue also dependent by the development of new technologies. Our world is changing, and therefore, and consequently, also the legislation is changing, and the GDPR regulation is changing the way of businesses operate both inside and also outside the European Union. And in essence, my view is that the GDPR imposes an increased burden on organization. And the events surrounding the implementation of the GDPR have also increased awareness on the part of individuals and organizations as to the changes that are being implemented. And amongst the others, as I said, the mandatory notification has been brought a new scenario, which brought a higher risk of claims, also in connection with increased awareness on individuals. And given the potential exposure to very large administrative fines and third-party claims for damages, the stakes are higher than the past. But if somebody would have asked me which might be in the future after the GDPR implementation, the higher litigation risk, I would have answered privacy law claims. But nowadays, after 4 years of implementation, I have changed my idea. Because our experience say something else. But let's have a little step back. The GDPR consent in particular to claim for compensation, not only for material damage and economic damage, but also non-material damage, including distress. So let's have a look at this kind of a voice of quantification. And as a compensation, a claimant can ask for shock, distress caused by the accidental publication, for instance, of their personal data. But how to calculate this damage? Which is the real cost, the real quantification of personal distress? 30 euros, 10 euros, 100 euros, who knows? And the damages shall be either, as I said, material and non-material. And as non-material damages, no classification is required. For certain jurisdictions, any possible category of non-material damages might fall within this definition, such as, let's think about reputational damage, emotional damage, embarrassment, and so on. And the difficulty is the real assessment of the quantum of these damages. And usually the court is guided by cases and a previous case law involving similar cases such as psychiatric and physiological injuries. But another issue is, are we going to fight or to face only one big litigation about big class action, or we have to face hundreds or thousands of small claims of a value, let's say 50 or 100 euros. Also in this case, we have no unique answer, because it depends on each own jurisdiction. But on the other side, it should be taken in consideration that nowadays probably the litigation have knowledge higher damages in connection with business interruption. Yes, you know that business interruption covers business income resulting from a cyber attack against a company's IT system of network. But we know that the concept of business interruption has been around in insurance sector for more than 200 years in the property arena. But it's relatively new and rapidly evolving coverage compared in the cyber world. The fact that companies, corporations are interconnected, this might make a higher and higher risk for business interruption. Or on another side, let's think about patents stolen and data, industrial design stolen, for instance. This might cause a damage of millions of euros. So one of the issues that should be taken into consideration, that because of the evolving of the technology, insurers might be called to face and to cover unexpected costs for business interruption. So this is absolutely an issue that should be taken into consideration for quantification, according to me, nowadays. And other issues concerning under a pure legal terms are certain clauses. First of all, a question is if it is covered the cyber extortion payment. Yes, also in this case, we have not a unique answer, because it depends on each jurisdictions. Usually the Anglo-Saxon word uses to cover this kind of payment, but there are some countries where is forbidden, it's prohibited to cover, for instance, kidnapping ransom. such as, for instance, Italy. So, but in that case, as also in other civil law countries, there is a rule that is the provision to apply special laws to similar cases. So I believe that in case of a lack of a special prohibition to cover cyber extortion negotiation, let's say negotiation and not payment, I believe that is a valid clause also in that country. On another side, if we have a look on other jurisdictions such as the US, anyway, obviously we have had to have a look to the OFAC rules, but anyway, usually the US government obviously does not encourage the payment of cyber extortion, but obviously on another side, it should be it should be understood that the payment sometime or the negotiation might avoid further damages to the insured. So obviously any payment of ransom should be done under certain compliance rules. Obviously, the advisory notes that OFAC will continue to designate ransomware attackers under its cyber-related sanction programs, and warns that it will continue to impose sanctions on others who materially assist, sponsor, or provide financial, material, or technological support for such activities. So the main issue is that any negotiation, any payment should be done under certain rule and certain compliance principles. Another legal issue that should be faced by lawyers is if the cyber attack might be considered, just in case, as a war attack or as a war activity. But also in this case, I believe that it is difficult to affirm that to distinguish between attack and attack, and so it's difficult to say that a cyber attack is considerable as a war attack. Obviously, in the context of the insurance market, cyber risks present unique challenges and questions. One of these is obviously if cyber attack might fall under the war exclusion. But anyway, also, if you have a look at the Lloyd's Market Association that attempted to address some of these concerns on behalf of the Lloyd's syndicates. And one of the thorniest problems with cyber attacks is the heightened anonymity afforded to perpetrators that attack from a distance over the internet. And it's difficult to establish if the exclusion might apply to a cyber attack. If we have a look, for instance, to international law principles, the attack usually is defined as an act of violence against an adversary. So any court probably would interpret the warlike action exclusion in accordance with the ancient international law definitions. And war refers to and includes only hostilities carried on by entities that constitute governments, at least de facto in character. So it is quite difficult, according to me, to demonstrate that a cyber attack is determined, is organized by a foreign government. And moreover, on another side, I think that might be useful also to have a look to certain recent case law. For instance, that one, the partial summary judgment issued by last December by the New Jersey Supreme Court. In that case, the court was examining a NotPetya cyber attack dated 2017, in which were claimed against all risk property reinsurance policies providing coverage for losses resulting from destruction or corruption of computer data and software. And the parties in that case disputed whether the NotPetya malware, which affected Merck computers, was an instrument of the Russian government, so that the war or hostile act exclusion would apply or not to the laws. And in that case, the court noted that there was no indication in the policy that, or in any other document, that that war exclusion had been negotiated, since it was in a standard language. So the court concluded that under obviously the New Jersey law, the doctrine of a construction of insurance contracts that gives prevalence to the reasonable and expectation of the insured, even in exceptional circumstances. So it means, in other words, that that it might be possible in these cases to apply the so-called contra proferentem rule. So if the contract is not clear, probably the court would apply an interpretation more favorable to the policy order. So in a nutshell, I believe that at the end of the day, it's quite difficult to give evidence that a cyber attack is organized and decided by a foreign country against another country. Thank you.
Thank you very much, Giorgio, and please excuse my lack of intervention before your presentation. I had a sound problem here. Well, it is very interesting, and I think at this point we can join in the panel of discussions, and I'm encouraging you all to ask your questions via the chat or on the YouTube comments. And I will start by asking both of you the following question. Cyber attacks are becoming increasingly frequent and technically more sophisticated. And do you think that their potential targets in this context are really aware of the threat and are prepared to deal with the risk? Their risks management program, let's say, it's sufficiently developed also in respect of the cyber risks? Are they really considered at the real possible impact by the customers, not by insurers? Matt, would you start?
Yeah, sure. Thank you. It clearly differs. You know, some companies are more ready than others. But I think you raise a really interesting point. because the cyber risk is a business risk. It's not just an IT risk. So the problem is sort of who owns the business risk. So we have, you know, the cybersecurity professionals whose job it is to defend organizations, but they're not necessarily aligned to the business consequences. So how they, you know, even if a company is sort of aware of the risks that it's posed to it from a cybersecurity threat, does the business understand what the consequence is to the business? You know, are they developing resiliency and redundancy, or are they focused primarily on defense? Because if a hostile actor is determined to attack you, they will get through. So it is more about your resiliency and your redundancy to that attack rather than just pure defense.
Okay, Giorgio, what do you think about this?
Yes, I believe that especially small and medium market companies are not sufficiently aware of the risk. They consider that this is not a risk that they are running, that probably refer only to big companies. And also on another side, I believe that the managers are not aware of the fact that cyber risk is a risk that is evolving, because the technology is changing day by day. And also our life is changing day by day. Also consumers have a new expectations. Probably 5 years ago, nobody of us has ordered something online or asked for an hamburger on internet and so on. So also consumers' expectations are changing, and also corporations the business is changing. So, and I believe that also the job of underwriters is quite difficult, according to me, because clients might change also their business from 1 year to another. Let's think about companies who decide to open an online store, for instance. So there are several factors that led me to think that corporations, especially those who fall within the small and medium markets, are not completely aware of the risk.
Well, indeed, in fact, the more complex an ecosystem is, if you look at a business as an ecosystem, the more numerous are the places which can, or the number of things that can go wrong. And I remember a discussion that there was very vivid some years ago about the position of risk managers within the companies, because, okay, you have a risk manager, is assessing probably correctly the risk, but how much credibility he has in front of the board, of the head of the business, and how much his recommendations are taken into consideration. Do you think that in this play, let's say, between risk managers or risk assessment and the final business decisions, cyber risks are taken into consideration enough? At least at the level of the big corporation. Let's forget for the moment the SMEs. where structures are less complicated.
For me or Matt?
Any of you who has an opinion on that? Let's start with Matt.
Cool.
Then, if I need to choose.
You know, I think, you know, cyber has become a board risk. There is no denying that for the large corporates, cyber has become the big concern of the board. You know, in many ways, that's why cyber insurance has become so important, because the board are looking for the kind of financial hedging of the risk. I think when you look at the cybersecurity professionals, their desire is, you know, we don't need cyber insurance. We need to spend more money on protecting the company, whereas the board usually recognize that though you need investment in cybersecurity, that reduces risk, but it never removes risk. Whereas the only way to kind of remove the residual risk is to financially transfer it. So clearly, to me, the prevalence of cyber insurance itself almost shows that the board is becoming more concerned about the risk. And often we even see that a lot of cyber insurance almost comes through the, you know, especially in places like America, it can come through the D&O market, you know, the brokers who engage with the board the most, because the board are so concerned about it. You know, I think when you're looking down at the smaller companies, as we all acknowledge, you know, they have so many risks. Do they have the resource? Can they join all these things up together? Not so sure.
Giorgio?
Yes, obviously a particular area of coverage that is expected to grow in significance in relation to cyber events is liability relating to directors and officers, where the duties of senior management to maintain, for instance, share price and business viability through adequate, solid security protections and contingency planning may become more onerous with cyber events causing damage to the balance sheet and shareholder returns. So this is another issue to be taken into consideration.
Listening to you earlier, Matt, I was thinking to one thing. Maybe cyber risk in some cases considered that a long tail one. For instance, I don't know, a data breach that happens now may produce real losses after a number of years when the data are used in a special context or are not available for use.
Yeah, I mean, I think it's the difficulty of cyber, you know, it is that it is, especially when we're thinking about events, when things happen, you know, the cyber attacks can last from days to years. So, you know, from data being stolen to data appearing in the wrong place, the legal ownership of data, you know, people stealing data and then corrupting systems at a later date. It's there's a whole gamut of risk there that's, as you say, kind of spans time, but it also makes parts of the insurance proposition tricky because, you know, in most insurance, we have that kind of notion of an event, something that's happens that is in fixed time and space, whereas cyber just sort of doesn't really fit in that well. You know, cyber doesn't really have a location, and the attacks happen over such long time periods that the timing and, you know, the definitions become awkward and difficult.
So this lands in the territory of Giorgio more than maybe the technical one. I would also like to ask you, because it was about also business interruptions related to cyber risks. In some cases, it may be a domino effect, because something that happens in a company and I don't know, obstruction it's functioning for a while, may produce losses in other companies on the entire chain. So is this taken into consideration in the insurance for cyber risks, or is just a side effect?
It's the difficulty of the supply chain, I think, is a risk that's becoming more concerning and more aware for almost all, because the supply chain that you're talking about, the risks go both ways. So we see cyber attacks happening through the supply chain. So my suppliers actually pose risk to me, because the attack, that I have a trusted relationship with my suppliers. So therefore an attack on my suppliers could actually impact me. But then there is the point that you're raising also, where if my supplier is attacked and then they just cannot produce product for me. So there's the kind of the attack going through the supply chain, but there's also the consequential business interruption of the supply chain. And I think, we're it's that difficulty of how broad should cyber go, because typically we think of cyber insurance being intangible. So if I produce digital services for my clients, if I'm impacted, that contingent business interruption of my digital supply chain, that makes sense to fall under a cyber policy. But if we're talking about a digital attack that means I can no longer physically produce something, does that physical impact, how does that impact insurance? Because now we're crossing between a physical event and a digital event, and therefore is this in a property policy or is it in a cyber policy? The water gets murkier once again.
So again, we are landing in Giorgio's territory. Do you have an opinion on that?
Oh, yes, absolutely. It's absolutely true that the first party side is absolutely important. Absolutely. And we faced several cases in which the BI deals with the first party coverage. I would like to add on as regard the contingent BI. Many third-party vendors attempt to limit their liability through a variety of contractual terms. So in these instances, obtaining a CBI coverage may be critical to protecting your business.
Okay, then. So to conclude a little bit this part of our discussion, would you say, Matt, that the insurance industry is keeping the pace with the changing nature of the risk? Do insurers really adapt fast enough to the way the risk is evolving?
I think they're learning to. I think some of the points we saw early on in cyber insurance, that the terms and conditions broadened very widely to kind of help cover the different risks that corporations face. But then clearly the coverage went too far without the adjustment in pricing. And we've seen, with the increase in ransomware attacks, the kind of erosion of margin, companies losing money. And now we've pivoted into a harder market where the rates have increased, coverage has been restricted. So they're learning to deal with it, but it's always the difficulty of the insurance cycle that there's always the kind of who blinks first. When people are trying to gain market share in a new market, nobody wants to be the first to put up prices to respond to the fact that the risk has changed, because by putting up prices, they will lose market share. So you have the horrible dynamic of market reality, capital reality, and changing in risk. So I'm pretty sure that many of the carriers knew that they needed to take action before they did. They just were too scared to. And I think, as I tried to say before, there's a kind of, is there a new paradigm in how insurers act that, they'll continue to get it wrong, because if they didn't get it wrong, there wouldn't be such a thing as a hard market and a soft market. But at least I think we've learned the lessons. It's just how well we're able to put them into practice because of market forces not driving being such a strong driver. But at the same time, we've seen multiple reports that cyber will be a hard market for several years to come. Be interesting to see if that really is true.
Well, I have pretty much the same question also for Giorgio, in what regards the legal aspects of this type of insurance, wording, exclusions, etc., etc. Do you think that all these legal aspects are keeping the pace with the changing risks? There is always some gap, let's say, but how large is this?
Absolutely. Since the technology is changing itself day by day, the legislation and lawyers are quite a step back. So it's a strange part. The technology is faster than the legislation. So this is an issue to be taken into consideration. On another side, I would say that the policy wording should be clearest as much as possible in order to avoid any claim on coverage, and in order to be sure about the application of any single clause and any single exclusion, considering that the court usually might apply the contra proferentem rule in case of any uncertainty in the language.
I will go back to something that you said earlier about the small and medium enterprises, and it is right. I have read in several places that many of them are declaring that they consider that too small for really having an exposure to or a serious exposure to cyber risk. They're not enough interesting for the attackers. But do you think that really is there something like that, too small to be attacked?
No. This is not true. I believe that everybody is a potential target. Everybody and every company, even the smaller. But on the other side, I can understand that especially small and medium-sized companies are not well prepared in order to face a data breach or a cyber attack. But if this is the case, more and more these companies should look at the insurance market in order to buy an insurance coverage in order to also to receive the services that an insurer might provide to them, because small and medium companies probably have already an IT service provider that might be very good for the day by day, but not for emergency. And the same as regard lawyers. Probably they have a very good corporate or commercial lawyers who can help them, but they don't have a privacy breach expert that might intervene and act within a couple of hours or within 24 hours, 7 days a week. So this is the plus of this kind of coverages. They are absolutely targeted to the small and medium market. So it is absolutely fundamental to me for a manager or an insurance manager to have a look at this possibility.
Thank you. I understand that we have some questions from our participants. Adriana, can you help me with this?
Yes, of course. We have a question for Giorgio Grasso first. Many ransomware attacks are also causing significant GDPR breaches. What are the most sensitive aspects from a legal point of view?
Obviously, the data itself. If we are talking about data sensitive, obviously, this is something that should be taken into consideration. And as regards, for instance, some critical providers, such as hospitals or clinics or banks, should be absolutely aware of the fact that a data breach might affect sensitive data, and should be aware of the fact that in case of breach, articles 33 and 34 of GDPR would apply. So the privacy expert should analyze if effectively a breach occurred, and if it is necessary to first of all, inform within the 72 hours the local supervisory authority, or as soon as possible any single affected person.
Thank you.
Thank you.
We have actually the same question that we addressed to the previous panelists. It's available also for our distinguished panelists we have in face. So, do you consider the present level of cybersecurity among the insurance companies is adequate to the digitalization push? For both of you.
Oh, that is interesting, because in the end, insurers are not only providing cyber insurance, they need to protect themselves for the cyber risks.
I think there's two things here, isn't there? I mean, there's we've seen examples where cyber insurance companies are targeted because, or allegedly targeted is probably a better way of saying it, because their policy list is essentially a criminal's target list. If I know who has cyber insurance, that makes a very attractive list to know who is more likely to pay a ransomware than anyone else. So, especially, I think you've got the kind of how good does a normal insurer's IT protection need to be? And then you've got how good does a cyber insurer's IT protection need to be? And some of that's similar to things like kidnap and ransom insurance. You know, there are definitely certain types of insurance where the privacy of that data is of incredible importance, and therefore the defense needs to be better, and whether it's good enough, yeah.
Nobody knows.
It should be considered also that as regards the insurance sector, usually local supervisory authority have published a compliance program in order to invite, let's say, invite insurers and the players of the market to adequate themselves to the new GDPR impact. So I hope that insurance carriers and also other players such as brokers are already are aware of the compliance of the applicable compliance requirement, and so they should be prepared.
Daniela, we have still a question for Matt.
Yes.
So this comes from Gordon. If there was one lesson that the market could take from cyber with regards to either existing classes or any future new classes of insurance, what would it be?
Wow, this already sounds like a conclusion. So please.
That's a pretty tricky, horrible question, isn't it?
Challenging.
Challenging.
Like cyber insurance.
You know, I'd probably reiterate some of the points that I made previously. I still think, you know, that this is an insurance problem, and it's understanding what the problem is, and it's understanding how to keep pace with the risk. It is the problem. You know, if you can't keep pace with the risk, that's where the problem lies, which, you know, we've had to learn from other lines of business. It's just a different type of risk that needs different ways of measuring it and understanding how the risk is changing. But if we can't understand how the risk is changing, the carriers will be in trouble. And if the carriers are in trouble, then you know, then people won't be able to buy cyber insurance. So you know, I think that's a very important problem that the insurers have to learn how to act quickly and to recognize the risk.
Giorgio, would you have something to add to this?
Oh, no, not really. Matt has already explained it right well, the concept.
Okay, then I will go back to Matt, and I cannot forget you are coming for RMS and modeling. It's your core business. So we have talked in a previous edition of our conference about modeling cyber risks. Is this are there novelties to say in this respect? Cyber risk, you said then that cyber risk is, after all, a risk that can be modeled.
Yeah, I mean,
condition. Do you maintain this opinion?
Very much so. You know, there are many different dynamics to cyber risk, but just because those dynamics are different doesn't mean that they're not solvable. You know, I think, you know, from our perspective, there's two elements to trying to model a risk. One is, you know, trying to help people price the risk to understand where the risk is going, and the second point is more about how big and scary can the risk be, so carriers can think about how much capital they need. You know, if cyber goes wrong, how wrong can it go? But for most of these things, you know, there are multi different elements to cyber risk, but for the most part, it's a human-driven peril. You know, it is a human threat actor working in a kind of a place where vulnerabilities have been made by other humans. But once we remember that, you know, all threat actors, all people are rational, and as long as we can understand what rational means to different people, because people do have different motivations, they are still rational. As long as we can understand that, then it is modelable and it's understandable and we can quantify it. And it's kind of, you know, I still think a big part of cyber is getting people familiar with that and getting the kind of reinsurance capital comfortable with cyber to make the big investments in it that is needed. But where we see the very large reinsurers who have deployed lots of resource to thinking about cyber, they've got comfortable with cyber and they're increasingly reinsuring more of it. So there's, I think, you know, the kind of the framework that models bring will always be wrong. You know, models are always wrong, but they're useful. And as long as they're useful and they're objective, people can make better decisions. And I think, you know, cyber can be modelable and understood, and people can make better decisions using them.
Well, this is something that definitely changed in the last decade, I think, because was not so long ago, probably around a decade, I heard statements coming from big reinsurers in this world saying that they're avoiding cyber because it's not quantifiable and it can be underwritten correctly and better not, better avoiding it. Look,
Yeah,
10 years
I
later, we are speaking about a measurable and accessible risks.
Yeah, and I think some of it, you know, it's almost the other way around, that you have to measure it because the risk is so big that if the reinsurance and the insurance industry doesn't embrace it, if it doesn't provide meaningful solutions, corporates will go elsewhere for risk transfer, and they do that, and it's to the detriment of the insurance and reinsurance industry. So they have to get comfortable with the models, but the models, you know, it takes time to get confident in those models because they are complex and difficult, but they are useful.
Oh, it's a learning process. Yes, Giorgio.
Yes, obviously, as I said during this conference, the cyber is constantly evolving risk, as is the nature of the technology. And interest is not only linked to big data and the desire to gain financial benefits, but also to cause disruption to the physical world. And there is a limited, the fact is that, and the problem is that there is a limited amount of actual data, leading to uncertainty as regards to the extent and the magnitude of potential losses. And technology drives fluctuations in risks and threats so that it's difficult to predict future losses from past events.
Thank you. Well, this concludes our discussion, and I would say that my conclusion would be that as motor insurance, for instance, is not only about cars, but also about the drivers. Also in cyber is not also about technology and digitalization and everything linked to the IT field, but also about humans and interactions and business and a lot of other things that have to be considered, all of them, when talking about the evolving nature of these risks. This being said, I would like to thank you both for your contribution, as well as to our other speakers today. And of course, to you all for attending this conference. Let me remind you that the entire recording of the conference will be and remain available on YouTube, so you can revisit it if you need to see again some parts of it. Also, thanks to our speakers, their presentations will be available for download on the conference website. And in the end, I would kindly ask you to attend our events next month too. We will speak then about motor insurance and property insurance. You will receive more information with our feedback message for you after this conference. And I hope next time we will meet in person to talk about all these quasi-material things related to cyber insurance and about other topics too. The first opportunity, don't forget, will be in Bucharest in May on the 23rd and 24th of May. Hope to see as many as you as possible, to shake hands finally again and share a little time together. Till then, thank you to our sponsors, Euroins, Asisoft, and 5 Plus. And thank you all for being here with us again. See you next